Whether you're a trader or investor in markets right now, you know this week is going to be big. Trillions of dollars of options expiration, dark pool activity starting to rise, and insiders trading everywhere. So which key levels are starting to break ahead of the inflation numbers and which ones are still simmering? Today we'll be going through stocks, commodities, and cryptos, and also talking about some history that I think you'll find very interesting. So welcome back everyone to the Daily Show where we talk about markets around the world. We'll be covering the macro, lead indicators, and hottest charts you need to be looking at. My name's Tom and we've been running this show for over 3+ years. So if you love markets, make sure to subscribe and hit that like button. Semiconductors were down again with the NARCs, a couple of days of rotation here after we saw those huge dark pool activity trades. And inflation-based metrics are starting to move with commodities moving up, in particularly copper could be breaking out, which we'll look at later on today. And if you haven't followed copper, it is a very important metal to do so. Just a quick reminder as well, follow us on the socials and VIP weekly newsletter. We'll be putting it out after the CPI inflation day close with some big zones, because if we break through a couple of these huge zones coming up in today's show, I think it could get pretty fierce on markets both ways. S&P 500, 5100 will be the big level where negative gamma may occur, and we'll go through that later. The VIX 16 zone, which we've been speaking about for a while, and then of course NVIDIA with 3 key zones for both bulls and bears and dollar cost averages coming up. Let's discuss CPI. Most of the economists, this is what they believe, and we posted this over on our X, and basically it shows you here that we have a 0.43 overall median forecast with a 3.1% CPI. So what's happening? We expect inflation to go up a bit. Energy, no doubt, will be part of it. But will we continue to see massively sticky shelter? Well, we'll do a report on it after the fact. But in this case, it's going to be a volatile day. And we're seeing some big structure volumes coming through for the S&P as people hedge into this event overall. Now, a lot of you might be aware that Bitcoin is on a run. And of course, it just made a new all-time high after dropping 15% in the last week. Now, a lot of people are getting really hyped about the exchange-traded fund, and why not? I mean, exchange-traded funds are a big deal. They're going to bring in all those alt assets from, many people say, boomer money, and it's going to be a huge deal. I expect this to become, probably $1 trillion overall asset class in terms of just the ETFs over the next 10 years. Now, it takes time though, and I just wanted to kind of bring this up. We're still at between $40 and $50 billion in terms of overall size. So we're still very small in terms of the ETF world. Now, I have noticed that a few of these ETF providers are going super pro now. The Wall Street players are getting super pro on Bitcoin. Why? There's a lot of money at stake. Obviously, ETFs, it's all about scaling to become the biggest, and Grayscale is currently doing it. What about bullish US stock markets and these huge FOMO kind of covers that we've been seeing recently? Well, Jason came out and he did a report on it. I've already covered this one before, but I thought it was so interesting. When you see a Barron's and you see the Economist so close together with big bull covers, it often can mean a sideways or even downward slope is coming for markets very, very soon. Interesting, not many reads. It's just funny how when we see these types of things in the news, often it does mark an area where we see rotation and also possibly just a bit of stagnation in markets. So where have we had some of these large trades coming through? Well, I thought I'd put it today in the front of the video because we have got large dark pool and big activity happening on semiconductors right ahead of the CPI day. NVIDIA in particular finding a monster trade down the low. Is it a buy? Well, if we break through the previous high, which we'll go through later on, then I think it's going to be a pretty serious event. Big one here on NVIDIA. Big one recently on, of course, TSM, which turned out to be a sell, which we suspected it would be. But now we've got a huge one sitting at the lows as well. Yeah, there were a lot of semiconductor trades with a lot of kind of BTFD style situations going on here. So does this mean that all semis are going to go up over the next 24 hours or are they just further sells? Well, they're all happening at around these demand zones. Here's another one. This is the Daily Semiconductor Bull 3X Fund, SOXL, with another unusually large trade coming in right at the lows. And you can see that that's been the previous kind of demand zone. So it's clear that there are a few people hedging their bets or at least placing some large transactions straight into the overall inflation number. And it doesn't just end there. We've also got a 3X S&P fund putting through at around the 5100 level equivalent on the S&P. There's so much at stake here. Imagine if we break below. You just know that it's going to be wild in markets. Now, if we break up, it's going to probably become a squeeze, and we'll talk about that later on. UPRO also showing a massive transaction. So far, the UPRO trades have generally been positive. And you can see again here, we've had quite a few, but this marks the largest dark pool trade that we've had pretty much in the last couple of years. So a monster trade coming through, and it just marks so many huge trades. That's not even all of them. How many were coming through over the last 24 hours in positioning right ahead of the CPI itself. So what do we need to be watching? Well, I've talked about VIX 16 before, and you can see here that Tom McClellan has come out and he's gone through one of his ideas with the VIX, which is the percentage of spread from the highest VIX futures contract to spot VIX. And if he sees this kind of coming up into these 60% zones, often that can mark a sideways to downward period of the market. Now, he's kind of correctly allocated here that we're not in really good buy zone, that's for sure, but we're also not quite in the extreme of the highs just yet. That may change, and hopefully we can get an update on this, but it's a pretty decent read of the bad things to come. And you can see here that in the past, when we've hit these levels, soon after we've basically seen pullbacks. So again, one we should be tracking, and I thought it was a big bit of information for us to share. Where are the opportunities if we continue to squeeze higher? Well, I think it's clear that it's probably going to be continuing in mid caps and small caps, and particularly small caps. Mid caps have already started to come forward, and you can see that when you look at the RSP, which is the equal weighted market. We can also see that small caps, in particular the hypergrowth stocks from 2021, are starting to get started. Some notable names, SE, we've seen Square as well. And of course, we've got plenty of those type ARK-K kind of funds. Those ones have been doing very, very well in recent weeks. Solar, clean energy, all of those. These are probably the stocks that are going to have better back ends of 2024 if we continue to be in a bull market, which the data does suggest that we may be in. But if we're going to see bears come through, usually this week and next week are the weeks. This is, of course, trillions of dollars of options expiration, and that means that the S&P 500 performance over this week period is generally kind of mixed to down the week after. Then often we do start to see it pick back up. But just remember that it's options expiration week, and currently the max pain sits at a lower level than the current price. So if we break through 5,100, there's a good chance that the market will actually start to freak out a little bit as we go into a negative gamma situation and it pushes down. What about the S&P 500 performance over March? As you can see again, if you're looking at it here as a graph, you can see the weakness that tends to come into that OPEX period and then sideways to sometimes up. Generally speaking, in non-election years, we actually go down further after that particular time. And it is something that is worthwhile watching. Now, why is this? Because we've started to see CTAs reduce. We talked about how Goldman Sachs, their robots kind of were saying, you know what, expected flows are down for CTAs. And we know that when CTAs start to dump, it could be an early warning sign of a topping or sideways style market. Now, that happened last week, and it's pretty clear that we've had fairly large reductions in the S&P. We've had fairly large reductions in the Qs as well in terms of overall CTA positioning. And that's leading into, the possibility of further weakness, especially if we break through some of the key zones we'll look at soon. What about gold? Well, gold stocks, and everyone started talking about gold. We've been talking about it for a while now, and gold stocks in particular still super underpriced compared to gold spot. So in the future, if you're trying to play gold, maybe gold stocks are worthwhile. And the main reason is going to be because when you look at a chart like this, and of course, take your own risk into consideration and everything. But if you have a look at stocks like this or markets like this, the gold stock ratio is very, very low. So it hasn't been like this in a very long time. But when we see a turnaround, it can mean gold stock outperformance to gold spot ratio for quite some time. You can also see here that overall the options market for gold is pretty positive. It's similar to what we've seen recently in markets when they've been going bullish with a very call heavy style situation, which is pushing through. So each time we're pushing past these zones, we're tending to squeeze up to the next level. So it's a pretty good kind of scale here for the options market. As we mentioned before, a lot of people are hedging into the CPI day, and this is because we can see here the IV term structure for the S&P 500 and how it drops straight off after we go through this week. Now, a lot of that is CPI inflation hedging and, of course, OPEX inflation hedging. So this week is expected to be volatile. The VVIX, the VIX in general are up. And after this week, we drop straight back down to theoretically not very fearful markets. So at the moment, there's a bit of fear. Maybe it could be like the calm still, even now, before the storm, which could be next week. So something to watch on the markets overall. Let's now go through the options levels that you need to be looking at. 5,100 in particular is a huge zone. And you can see here, whether you're looking at the 12th, the 13th, or the 15th, there is a lot going on, in particular the 5,100 zone. Can you see here on the 13th, these huge amounts of puts? Now, if we break through that zone, we're going to see a switch in convexity of this market, going from positive gamma to a negative gamma situation. 5,100 is the watch. And I think there's going to be, generally speaking, a lot of buy pressure that's going to sit around that level. That's why we spiked off it over the last 24 hours. And if we do manage to get through it, of course, the next level would be 50-50. And if we manage to break through that, then, of course, we're in a swing trading market towards possible downside action. So at the moment, bullish is the current market condition until we go under some of these key zones, at least from a technical perspective and an options perspective. If you're a longer term investor, should you be worried about, a slight pullback, a 5 to 8% correction? In general, no. It's pretty normal to have them during these particular stats. But as we know, considering the situation of the December, the January, and the February bullishness, we have a 25-0 run traditionally in markets with some very nice average returns. But there are some corrective periods, 5.8% lost this month, 7.2% lost with an overall still bullishness record. So just remember, we can still pull back, but at the same time, I don't expect it to be massive. So let's now take a look at some of the key news stories that are coming out this week before we look at the inflation data. And of course, you can see here Tuesday, pause the video if you're interested. Wednesday, have a look at that one in terms of the notes. Thursday, and then Friday overall. Quite a lot of information coming out, but really comes back to inflation, retail sales, and options expiration. CPI, here it is, 3.1 expected, and you can see it's coming out at New York time, 8:30 a.m. Then we have core retail sales in general, and prelim UOM consumer sentiment on Friday. So that, along with the bond auctions, are sure to make basically rates move quite a lot, treasuries move, and a whole bunch of other markets start to spike across the board. What about rotation over the last 24 hours? Well, we've seen 5-day rotation continue into smaller caps and defensives. Gold in particular doing very, very well. Regional banking doing very well. Solar coming out with a massive blow up, which is very, very nice. A big level here for solar. Obviously, really been hit around for the last couple of years. And then we have energy and utilities continuing their breakout. In particular, energy is nice to see because, of course, oil is at the precipice of a very large breakout if it is able to do so. Last 24 hours were all about the old economy in some ways, gold, energy, and solar, as we can see here, with staples also coming into it, utilities ahead of the CPI. So the market was moving a little bit defensive, although we did see semiconductors go down. Overall, it was a defensive market, and there were basically no options traded. I won't speak too much about it because it was only 37 million versus the normal 41.7, 57% calls, and retail remained very, very high at 30%. Here were some trades that were going through, but in general, it was nowhere near as big an options market that's coming on Tuesday, Wednesday, and Thursday of this week. There's going to be some massive trades coming through. What zones do we need to be looking at in the charts right now? Well, it turns out the VIX 16 is a key zone, so we need to be watching that one. And of course, we also need to be having a very close look at things like the options markets and, of course, the bonds markets. No new high here on our bond indicator with the options market, so that's not really showing weakness yet. We did see central bank liquidity from both the Fed and central banks around the world start to reduce, which is a kind of big key deal. And overall yields stayed pretty much in the middle of the zone. If you want to know what's going to freak you out on yields, remember to look at inversion. So until we uninvert from the US 2 to the US 10 year, we're not really at a freak out point in markets. But overall, the US 10 year is continuing to hold around this demand with 2 days, or actually 3 days, of long leg dojis coming through, marking probably a coil before a huge break either up or down. We're not sure yet. If I had to guess, I would probably say something like this is the more likely kind of period. But be watching because, of course, treasuries will be at stake here, at least in the short term. And with treasuries, we do know that there is a potential for an island reversal towards the downside. A gap up with a gap down, let's say after the market opens, if it goes one way, that could actually force further momentum selling into treasuries. Doesn't change our longer term perspective, though, that I think treasuries are a pretty decent place to be over the next 6 to 18 months. Let's go through some other indicators here. Home builders was down. Obviously, we don't want to be seeing that if you're a bull in markets. And this was the first kind of change of trend that we've seen since realistically down here, where it's kind of sat around for quite some time. Home builders making a new low. That's pretty important, I guess. Not through the 20 moving average yet, but certainly is there. Dow Jones Transportations is another one that you should be looking at, and that's just remained stable throughout. What about our bond indicator? Right in the middle. No indication yet. I expect this to get very hyper though over the next 24 hours, and we'll update you on the channel once that occurs. US dollar remains to be held for now. Euro USD remains probably one of the better longs in the currency world, although I have seen some other nice longs coming through from things like the Australian dollar as well. You can see it's possibly flagging here for further moves. And we've been following this now for a 2-week storyline. So the euro broke through that downward trend line and so far has been really flogging most of us as retail traders. And what I mean by that is when I'm looking at the sentiment reports, a lot of retail traders have been trying to short the euro. I just don't think that's been a smart play so far. And from the chart perspective, it still looks like sells are going to be met by buy demand. Let's now move over to gold, another one that's flogging retail traders. I wouldn't be shorting against this chart, just like I wouldn't technically be shorting on Bitcoin, although I do believe there'll probably be a cheaper price on both in the future. Now let's have a look at it. So 2200 is a big key zone. If we break through there, we're going to be looking at probably option squeezing as well in part of the market and maybe at 2300 level. Weekly close was strong. For now, the market remains quite strong and quite up. If we go and have a look at Bitcoin, yes, I know it hit a new all-time high. 72,000 plus was reached. And this actually marks out a very important level. Now, of course, the other day we sold off 15%, which is very normal in the crypto market. And generally, it is marked by some sideways action. So often we do this. And then we kind of do that later on. Now, so far that hasn't happened. It's kind of like an SMCI where the market's gone up a little bit. So we'll find out what is going on with Bitcoin. The trend is still theoretically, of course, up. Overall, though, there were some stats to be said, and we've put them in the other videos if you're interested to have a look at them, that may show that a cheaper price is on the horizon. Although I'm still very bullish on Bitcoin, and we've already talked about how I think it was probably going to go to around a $3 to $4 trillion valuation this cycle. Let's now talk about US oil. Now, you can see here, overall, the idea of US oil hitting the 20 moving average is continuing to hold. We did end up getting a very lucky save here with a nice bullish hammer coming back through. No momentum follow through yet on oil, so that might be something you may want to set an alert for over the next 24 hours, 78.50, but we still remain at $80. We need to close above $80 so bad on US oil. UK oil is another one we could be watching, which is Brent, and we're looking for this thing to get through 84. But you can see the actual overall patterns are very strong. And at the moment, the coil has been sitting there for quite a while. And of course, energy stocks have been breaking out. So if you put XLE or any of these others on your charts, you'll notice that they've all been breaking out in a big way. So the stocks are breaking out, the oil price hasn't. And that's because what's happening is actually the future contracts for oil are starting to spike up. And that's well in the future. And we'll cover that in our next video. Copper's another one. It looks like there's a new kind of board authority in town with copper. So obviously there's a lot of meetings going on about constraining supply on copper, and that's leading to the price starting to break out. Again, 3.95 is a big deal for the copper market, and if we breach through this zone, I'm pretty positive on these markets overall. 3.95 has been held down for a while. I wouldn't be surprised if all of this is waiting for CPI, and if we see a break of copper, we see a break of oil, things are going to get very ferocious very quickly in these markets because the reprice is to at least, you would think, 4.15 for copper. So big deal, and Dr. Copper is something you should be watching. What about Tesla? Well, this is an interesting one because Tesla's back down in around the most traded zone. Now, is it at the low level yet? Not really. Is it at an extremely good buy level yet? No, but it did make a new low overall. And of course, it's now sat here for 1, 2, 3, 4, and 5 days. Now, it all looks okay, especially if the market measures to gap up. So you can see here to gap down and sitting. So again, could we be looking at an island reversal if it does gap up? Certainly worthwhile from a momentum traders based perspective, and they'll be excited about that. But no signs yet of Tesla having a miracle kind of session on it because it just keeps rallying and dumping off. And you can see it hit this most traded zone and sold throughout the rest of the session. So it did well, then it sold off. What about Nvidia? 850 held, which is very important because 850 and 800 remain the two biggest support zones on this stock, with 800 being this week's OPEX pricing. That's very, very important. And I doubt we're going to get underneath that very easily. Now, why is this? Well, it's because there's a huge amount of puts sitting at that particular zone, and it's a 20 moving average, and of course it's market structure and demand over on the left-hand side. If we have a look here at the high and the low, which is of course the big session of the doji, what does a doji tell us? It says we don't know what's going on. It's literally indecision. But I think buy the dip players will be looking for a high breach. So effectively they'll be looking for a high taken out, placing stops below lows around here, and then looking for that BTFD style situation to come back into a stock like this. We don't know that's going to happen yet. We could still keep falling, but we're basically just looking now for a reversal on these daily red candles, and we haven't got that just yet on the markets. We'll be watching 850, 800 worthwhile on the supports to see how the market interacts. SMCI starting to fall off a little bit here, lost 5.24% on the session, back to pretty much the previous highs. And at the moment, it did actually gap up and gap down. So it doesn't look super great on the charts. The good sign was a little bit of a wick, but in general, this is still a gap up and a gap down. And for people that shorted throughout the session, that wouldn't have been a bad play, I think, for the session itself. It did gap down after obviously creating an island reversal. And we've talked about this a few times. We expected it to bounce. That was pretty nice. And we kind of expected to meander around here. And it did spike up first. So I still think that it could be going sideways for a little bit. It's a very hot market though. So tough to call either way. What about Apple? Well, it started to show some nice signs of potentially finding some buyers. And we've talked about Apple versus the Qs recently. I think Apple's probably sold off as much as it's going to versus the Qs. So that means that it absolutely capitulated versus the Qs itself. And you can see here as a combo code, it's sitting kind of on demand. So I expect that it holds a little bit better versus the Qs moving forward, especially if they start falling off. But if you don't know how to do combo coding, you probably don't want to be doing that. Apple at, of course, just a minor support otherwise, with big supports really being well underneath that overall double top should we breach it below. So underneath 165, we've got 150 and 130, two massive levels. And I'm sure a lot of you would love to see those levels and get your hands on some Apple stock. Let's move over to the German markets. We've talked about how institutions may want to place some partial scale outs here based on ratios and a few other things they've done, fib extensions. Now, you can see here the daily had a high, low, high, high, no lower low yet. We've got an alert at 17,576, which just so happens to also be the daily 20 moving average. There are so many markets, if they do break underneath here, which actually then start to give us mean reversion strategies. So this is the first one. And obviously I don't think I would personally be buying it here unless I was day trading it. But if you're in the trend's still bullish. There's no reason yet to dump the stock unless you just want to scale and you've got a take profit zone. Just remember, you follow the trend until the very end if you can, if you know how to get out of them. Now let's move over to one that's starting a little bit of a new trend. And of course, this has been one we've followed for a while. Nice to see HSI coming back in a big zone. It was hitting alerts. It was showing momentum. And in the previous video, we talked about here really getting that momentum trade going. Another 1.4% on the session from that point. And yeah, really nice moves here on the Chinese stocks. I've seen some decent reports coming out from some of the actual earnings. And in general, of course, it's oversold. So yeah, we don't need to believe in it for 10 years or anything like that. But at the moment, it's making a series of higher highs and higher lows. It's holding the trend lines and it's broken through, of course, some big key levels. So we remain fairly bullish on it. And of course, CQQQ, K-Web and many others starting to look like they're making new highs. And it looks like they will over the next 24 hours based on that movement so far. Australian market is holding its own just barely, waiting for the US inflation numbers, 7,700. Sold off after really ballisting up here. You can see it actually dumped a total of 0.67% and then came back up. So interesting point here for the Aussie market. Volatility coming back in. Obviously, we'll need to be watching. What about the Russell 2K? Well, it continues to be weak here. I like the Russell 2K at 2,000, which I think is going to be the bottom of our channel. And obviously, I like a lot of the Russell 2K stocks, those smaller cap style, hyper growth style stocks. So interesting point, but very different to other charts. Like just for example, if we have a look here at TAN, which is solar markets, you can see how beaten down, how good a volume is coming through on these markets. And, there's just so many to name. If we look at things like SE, which is obviously a well-known kind of small cap, if we look at Square, Block nowadays, you can see also how well it's been doing recently. And there's a lot of breach outs and a lot of activity on these particular trades. So they're not for the faint-hearted. They're obviously very risky. But if we do start to see the market squeeze higher, I do expect smaller caps like this to start to really improve throughout the rest of the year. Now let's talk about the other one, which is, of course, this breakout. It does look like, although it didn't hit my alert yet, 0.8534 on the Q SPY combo, that maybe we've broken the ascending channel. Now, it's not quite broken because I like to see a new low also being formed. This trend line is still a trend line I've drawn. It's not really 100% perfectly accurate or anything. I like to use horizontal price whenever possible. So very close, definitely a sign of Q's weakening against the rest of the market at this stage, and one we are watching. The NASDAQ and Qs in general, still looking for 17,777 for a break below. I'd expect that to be where bears really start to take control. Break and close will be key on these markets. And of course, the S&P 500, we need to get below 50.50. But 5100, look around this level. The last low here is actually 50.94, which is technically the zone you want to be setting an alert for. If it gets underneath there, it's going to open up a negative gamma style situation, which may need hedging by the books. And of course, being OPEX, it's going to be a big thing. So at the moment, what's the market trend? Higher highs, higher lows, still bullish hammer. It's theoretically still going bullish. Okay, that's what it's showing you. But if markets start to get underneath here, and especially 50.50, with 5100 being the big zone in the next 24 hours, then we're going to get some activity. And notice that on a lot of futures trades, volume has been going up. So we've got spikes, we've got huge trades across the board. It's going to be a very interesting one and well worth watching over the next 24 hours. Just remember, we'll be bringing you some max pain levels as well as they reprice themselves after CPI. Sign up for our free weekly newsletter in the links down below. And if you enjoyed today's video, make sure to give it a thumbs up and comment as well. It does help us out. Thank you so much, guys. We'll see you in the next one. Bye for now.